Hello, I'm Michael Glass from MoveUpWithMike.com, where we focus on being financially literate so that we can make informed decisions about our financial future. Before we begin off our video, we always like to start off with some type of quote or cartoon, and here we have a cartoon about the economies around the world. And if it was just as easy as step 3 and rotate our chart, I'm sure all the economies of the world would be out of the turmoil that we're in right now, but we know that it's not. So what we've done is put together a 3 to 5 video series on understanding Forex. And our first video here today is about the obvious question of what is Forex. So you want to make sure that you click through. We have nice, short, to-the-point videos that will help you just kind of build your foundation of what Forex is and how you can utilize Forex to better your financial situation. So what is Forex and how do we define it? It's basically where we see the currencies being actively bought and sold by banks and investors. It is a process of transferring one currency for another. In that quote, and we have more videos for you, and one of them is going to be dedicated to the currency quote, is where we take a base currency and compare it for a counter currency, which is often referred to as a quote currency. So when we compare the relative value of that base currency versus a quote currency, that is our quote. Some interesting facts about Forex: it is the most liquid market in the world. When we think about the NYSE, the DAX in the United Kingdom, and the Asian Shanghai over in the Asian market, and we were to combine those, you would get to about a trillion volume per day, trillion shares being traded per day, with the United States being about 200 million of that. Well, Forex by itself is 4 trillion. So even if you combine all 3 major markets, you still are nowhere near the size of Forex. Typically, you don't see commissions in Forex trades. There is a spread that pays for the trading. One thing that's good about it is it's open 24 hours a day, and the fact that it's liquidity, you don't have to worry about being trapped in trades. If you think about, especially the NYSE, and let's say you enter a trade at the end of the day before, and you say, and you're smart, and you have some type of stop. But we know that many markets, there is what we call a gap up or down. Well, if the market gaps up past your stop or down below your stop, you're still going to get taken out, but at a much different price than what you were hoping to. Well, when you have a 24-hour market, your stops are more valuable because the market's not closing and there are no these gaps. And sometimes there are, again, although the market is open 24 hours a day, it really closes at 5 p.m. on Friday, U.S. time, and opens 5 p.m. on Sunday. But typically, you're not going to have your stocks being ignored or overshot because the market is open 24 hours a day. And with that liquidity, you don't have to worry about there being someone else on the market. So much volume, you can almost guarantee that there will be somebody else on the market. The 3 major markets are the United Kingdom, the United States, and Japan. And you'll see that usually within 90% of the current currency transactions, you'll see the US dollar being involved. Again, this is just the first part of our series on what Forex is. If you're looking for more information, go ahead to our website and we can help you through that process of understanding and getting involved in Forex trading. Thanks, guys. Be sure to go to video number 2.